Can you guys hear me?
Yeah, I can hear you loud and clear. Yeah.
All right, great. I was having some mic problems for a while already. Trying to figure it out. Might just have to buy a new one. Okay. So first of all, when the indicator does get sent out this week, you guys could apply, the exact same rules that you learn in this live stream for for any trading that you'll use with the indicator. It all works the same. It's just a little different from the triggers, but it still it gets the job done. Okay, so I think we can get started here in just about a minute. All right, if you guys don't mind, unless you have any questions, just go on mute because I want to record it. So, just so that there's no background noise in the middle. Okay, so I'll start off with meta because this is just, a phenomenal example of filling air pockets. This is something we always talk about. Hold on. To the Moon and Phantom 5, if you guys just don't mind muting yourselves, would appreciate that. Thank you. Okay, so take a look at this for a second. What just happened? What the hell is that? All right, give me 1 second. Let me just get this back on. Okay. All right, so I just wanted to bring this up because it's just such a great example. So we always talk about filling the air pockets. I'm not sure how many of you guys know what that is, how many of you don't. But if you take a look at the monthly velocity, so you can see that since November, December, and then here in January, you can see that the monthly velo has been getting better. What that means is that if price breaks above this weekly trigger, the fact that the monthly velocity has been getting less and less negative kind of means that there's a pull now to the monthly trigger, which was at 206. The monthly velocity repairing like this 2 months in a row shows that there's now a pull to the monthly trigger. That doesn't mean that price is going to go to the monthly trigger, but that does mean that if price breaks above the weekly trigger, then there is a large risk of price moving up to this monthly trigger. So this is just a beautiful example of that happening. This is what we talk about all the time when we say filling air pockets. Okay, now let's jump into GME. Okay, so just to recap a bit, we know we had this really negative cross, which is the weekly trigger crossing down below the monthly trigger. For perfect bullish orientation, you want to have the monthly trigger on the bottom, the weekly trigger on top of that, the daily trigger on top of that, and the hourly trigger is on top of that, stacked in order of monthly trigger at the bottom, hourly trigger at the top. Because then you always have dip support, you always have pullbacks into the triggers, and you just keep bouncing and price just keeps moving into an uptrend for multiple months or maybe even years. But when the weekly trigger is below the monthly trigger, you have these resistance levels that keep coming down to knock price down. So if price moves up here, it's going to knock it. If price moves up to the monthly trigger, it's going to get knocked. So this inherently, as soon as this cross happened, was a bearish sign for things to come for GME. And as you can see, price was knocked from 27 all the way down to a low of about 1602. Now we're back in this uptrend. So there was nothing really telling us that there was a bottom on the daily velocity. On the weekly velocity, this is called the capitulation print. When you just have like an extreme print to the downside out of nowhere, that just dwarfs everything else. That usually means that the downside pressure is coming to an end and it was all taken out in 1 week. And then a couple more important things happened. So over here, GME broke above the daily trigger. The hourly trigger crossed, and right when it crossed, we know whenever you have these trigger crosses, you always have a counter trend move back down. So you had the counter trend move back down, and this is where things just got really, really sticky. So this is very unusual. You don't really see this all the time. Usually, once you get this cross, you have a pullback to the hourly trigger or the daily trigger, and then price will move up and fill this air pocket. But it's been very, very, very sticky here. This should have happened much quicker. Like if you take any other stock, or even if you take GME in other instances, usually once price breaks above the daily trigger and the hourly trigger crosses, it's over. It usually means it's almost automatically going to go attack this weekly trigger. Now, what I'll attribute to this, to the fact that we were so stagnant for so long, first of all, if we take a look at the weekly velocity, we were coming off some pretty nasty weekly velocities. There was nothing telling us necessarily that price wants to be drawn up back into this weekly trigger. Even though price was able to break above the daily trigger, because the weekly velocity was not supportive of a move back up to the weekly trigger, in fact, it was getting worse and worse and worse and worse and worse. That could be a lot of the reason why this was so choppy, although it should have just went straight up here to attack 25. And then if you look at the monthly velocity, horrific. So here, I'll zoom in on this, just this part. So during this part right here, from this first break of the daily trigger, or even this one, or even this one, or even this tap, price should have gone up to the weekly trigger every single time. The reasons why it didn't is because the monthly velocity was horrific during this time period. So we had really, really bad monthly velocity, which was fighting any upside pressure. And that could be a lot of the reason. I'm not going to say for sure, but that could be a lot of the reason why price didn't just fill this air pocket like it normally would. But if you see at the end of my screen here, I'll zoom in, you can see what happened. The monthly velocity went from negative 0.795, and now it's 0.495. So, monthly velocity really improved for the month of February, which tells me that there's nothing fighting the upward pressure right now. In the month of January, we're fighting upward pressure pretty heavily. We're fighting this nasty monthly velocity, and we're also fighting the backdrop of nasty weekly velocities. Even though weekly velocity wasn't horrific here, we were coming off some pretty horrific weekly velocity, and so you need time to repair bullish momentum before you start making a climb higher. Now, going into next week, first of all, the weekly velocity is only negative 0.21, so that's not horrible. It's not great, but it's not horrible. You can see out of the past 6 months, this is one of the better prints that we have. We have been below the weekly trigger for this entire 6 months, so we haven't had any really explosive movements. Once price moves back above these two triggers, that's when we can expect things to get volatile again. That's when you could expect full dollar gap ups overnight. When you're in Eastern time and price is just climbing all the way up to 8 p.m. And you wake up at 4 a.m., you check price is climbing again. We're going to go into those really volatile times again once price moves back above the monthly trigger at 28.31. But for now, we have this guy in the way, which is the weekly trigger at 25.02, and the weekly velocity is not telling us that price could break above the weekly trigger anytime soon. So this week, we are not expecting a move above 25. Can it happen? Yes, absolutely. But even if it does, we'd expect it to be pulled back down before the end of the week. So we're not ready for a really strong move up yet, in my opinion. I do, however, feel that we're very overdue to fill this air pocket. So we just showed you what that looks like on Meta. This looks very conducive. Even without a Nimoy, you could see we made a low here of 1891. We made a higher low, 1946. Now we're making a higher low at 2059. Now we're making higher lows at 22. So price is climbing. Anybody with two eyes can see that price is making conducive moves to the upside. And in my opinion, it's only a matter of time until we hit 25.02, and that is my short-term target. Once we get here, I expect a rejection for maybe till the end of the week. And then next week, as long as price closes between 24 and 25, this negative velocity will be gone, allowing price to be able to move above this weekly trigger at 25.23, and that puts GME in a whole different ballgame. So the price movements that you're going to start seeing is going to be a lot different. When GME is under, or when any stock really is under the hourly trigger, the weekly trigger, you don't see really strong, powerful moves to the upside. If anything, you see really strong, powerful move to the downside, like we saw here. This is a really, really strong downtrend. In 1 month, price went from 27 all the way down to 15, so a $12 move, right? When you're above the weekly trigger, you can expect exactly the opposite. You can expect price to trend really powerful to the upside. And so we're almost there. For 6 months, we've been below the weekly trigger. We had a really good chance to squeeze right here if we would have broken above these two triggers at once. And I guess we had another chance here, but it was defended really well by bears. But this is it. If price can just hang out here for a bit longer, close the week as close to $25 as possible, I do expect the negative weekly velocity to be fully gone and price to be able to break above this weekly trigger. Now, the weekly trigger, the reason why it's so important is because it's a capitulation level. It's an acceleration level, an emotional acceleration level. So this is calculated based on the point of view of emotion, where once price moves past this, you're going to have a lot of bears start capitulating, whether it's small bears covering shorts, whether it's swing traders or day traders coming in looking for a move higher in GME, purchasing shares, purchasing options. It's an emotional point where once price moves above here, the momentum shifts from bears to bulls. So, you have the hourly trigger, the daily trigger. That's really nice for like swings, like for hour-long moves, for day-long moves, for even week-long moves. Like price broke below the daily trigger here, came all the way down really hard. So the daily trigger also acts as an acceleration level, but definitely not as strong as the weekly trigger. So if I had to give one forecast for GME this week, I'd say that I think we got to do a little more thrashing around in between this area. We need price to stay above this daily trigger. Daily velocity is pretty solid. There was a bit of bearish divergence here, so you can see price made a new high, but the daily velocity, these blue bars, did not make a new high. So it tells you that bulls are not fully into control yet. So between 25 and 20.92 is conducive for upside. This is what you want to see. You want to see just constant grinding up towards this weekly trigger this week. And again, if price can close between 23 and 25 at the end of the week, then we set up a really strong window, a really powerful window for next week to break above 25 and attack this monthly trigger. So that's what I have for GME. Take a look at BBBY, but first, does anyone have any questions on that? Anybody? All right, so let's move on to BBBY. All right. So now this is obviously really tricky because all the bankruptcy news don't exactly know which way this is going to go. But at first glance, so number one, weekly velocity has been improving pretty steadily over the course of this entire down move. We had our bullish weekly divergences that led to this move back up to the weekly trigger. Rejected with negative weekly velocity, nothing unusual about that. And if you take a look at monthly velocity I've been getting worse for 1, 2, 3, 4 months straight, and now monthly velocity has finally improved for the month of February. So a positive sign. Nothing telling me that we're ready to explode up out of the gate, but this is positive that monthly velocity is starting to turn in favor of bulls. Now there is a possibility for a move up to 519 in a very short period of time. And what you want to see is 304 hold for bulls. So this looks like a classic airplane setting up, which is when the hourly trigger, zoom in a little more. Hold on, let me get rid of some of this stuff. Is when the hourly trigger like airplanes off of the daily trigger and starts to make a move higher. So if the hourly trigger can start leading price up, you may very well get an attack of the weekly trigger at 519. So that's where I'd say price is going right now, and the only invalidation would be a move under 304. So to play this, what I would do is I would take options, let's say a month out. I would go, let's say March 3rd, I would take $4 calls right now, and if price moves below 304, I would cut them. So price right now is at 313, so I'm risking 9 cents downside. And on the opposite side, I have a $2 move to the upside. So that's the kind of plays we like taking, 10 to 1, so or even 20 to 1 risk to reward. So this seems like a very nice risk reward play right now. So if you want to go long BBBY with options, this seems like a great opportunity. You go long on Monday, Your stop loss is any move below 304, and otherwise you'd expect price to make its way to 519. Now for BBBY, this is very important. Any move above 519 in a Nimoy rules, you're going to see 1239 happen really, really fast. In August, you can't see it anymore. This move happened in 1 week. So price broke above the weekly trigger. It was at, I believe, it was at 8. And then price moved up to the monthly trigger at 16 the same week in 5 trading days. So for BBBY, when you want to really get into like that squeeze, when you want to really play that squeeze and make a killing off options, you don't need to play this whole move. You don't need to do any of this stuff because price is below the weekly trigger. You want to catch just the big moves and the big moves only. You wait until price moves above the weekly trigger and you play this. Nimoy will tell us that it's right now the monthly trigger is 295% away, but just using simple math, 519 to about 1239, you could catch 100% move in a stock. That could be a 10,000% move in options if you play this right. So we're excited. We're waiting to play this. This is going to be a once-in-a-lifetime chance to make a killing in options in 1 week time. So once price moves above 519, we're going to be sure to play this move up. Should happen really fast at 1239. Take a quick look at AMC because there's money to be made there as well, whether you like the stock or not. So AMC actually hit our target. So this is what I expected GME to do, and I'm really not sure why I didn't. Basically, this is called the airplane. The hourly trigger comes down to the daily trigger, and then airplanes off it and leads price up to the weekly trigger. This happens literally 90% of the time. First you have price breaking above the daily trigger. This is the first step. Then the hourly trigger crosses the daily trigger. Then you have a counter trend right after the cross. You have a counter trend move back down to the daily trigger. The hourly trigger will airplane off the daily trigger, and that's when you move up. Every single meme run in the past 3 years, 2 years, happened exactly like this. Price breaks above the daily trigger, hourly trigger crosses, price comes back down to the daily trigger, the hourly trigger will come down to the daily trigger and airplane right off it, and as soon as the hourly trigger starts moving up off it, price attacks the weekly trigger. For some reason, this time, it's very perplexing. I don't understand it fully. GME did not do it. So GME broke above the daily trigger, hourly trigger cross, counter trend move, tried, counter trend move, tried, but just couldn't get there. It was very, very unusual. So for AMC, there is a chance of a really, really nice move coming. I sold most of my options up here. I bought a ton of them at 522 on this move. You guys in the Discord, you guys remember I drew that red box right here. This is where I was buying. I bought about 200 calls and I sold 160 of them, I believe, already, and I have 40 left. I want to buy more at pullbacks to the hourly trigger or at pullbacks to the daily trigger because look at the weekly velocity. The weekly velocity is almost barely negative anymore. It's teeny, right? It went from being negative 0.23, negative 1.3, negative 0.08, negative 0.082, and now it's a 0.03. So if AMC had any chance to make a huge move up, it's this week. This week, if AMC manages to break above 655, in this same week, the week of February 5th to February 6th to February 12th or whatever, we can see price at 858. So be very vigilant. If you see price move above 655, then it's calls above, flat below. Meaning, as soon as price moves above 655, you take calls. What I like to do is I take 25% of my position. Let's say I'm spending $10,000. So I'll take 25% of my position in short-term risky options. So let's say in this case it would be $7 calls or 7.5 calls, same week, same expiration. And then I'd go a month or two out, March or April, and I'd take $7 calls. So if I'm right about the timing, then my 25% position, I'll sell it about here at about 858, and it'll pay for my entire position that I have in March and April. If I'm wrong about the timing, I'll lose a portion of the 25%. Let's say I'll lose 10% of it or 15% of it, if I'm still right about the move up, by the time it gets to March, April, my 75% position should have made me more than my money back on my 25% plus more. So the play is you get long above 655, which is the weekly trigger, and your stop loss is right under 655. So you're buying 656 or 657 or 658, and any move back below 655, you're out. So, there's your maximum risk is literally 5%, 5 to 10% if you play it right. And if you catch that buy, let's say at 660, and price skyrockets straight to 858, you make a real lot of money. So, here's an example: price breaking above the weekly trigger at 894. The next day, it was at 975. The next day, from September 9th to September 12th, it was a weekend. So, these moves happen really fast. This was also a really nice, strong move. It actually did hit 920, but a Nimoy only registers the hourly close. So because it didn't close the hour at 920, it didn't register. But I promise you, I played this, and we bought calls. Where was the daily trigger? We bought calls like right here on this tap. This is actually the day before FOMC as well. And the next day, price skyrocketed. We bought calls over here with a stop loss right below the daily trigger. So again, all of our plays are very low risk, low reward, because we're buying, let's say in this area, between $7 to $7.10, $7.10, and our stop loss is any move below the daily trigger. Price did not break below the daily trigger, so our maximum loss would have been 5 to 10%, and then we sold exactly at 920. I want to actually bring up the receipt, because I have a feeling some people are going to think I'm capping when I say this, but I'm going to check the date. I want to pull it up. What was the date? November 30th. Okay, let's go. Don't worry, this will be quick. Where are we? January 31st. It may not be that quick. Shit, this may take a while. But I want to do it anyway, just to prove a point. Okay, we're getting there. December. Okay, almost there. Alright, so yeah, so we had 12/29 taking AMC weeklies. That was right here, November 29th, so the day before. And then let's see, 11:30. What? No way. Did I delete it? Oh, okay, so I wrote, not a bad idea to start trimming AMC here on Pops as it nears the monthly trigger at 920. And I think, oh yeah. So I must have gave the alert in the main chat, but either way, we hit it to the penny. So I thought I had the message, but I didn't, so that's disappointing. But either way, if price moves above 655, that's the play for AMC. And then for SPY, this is something that's near impossible to predict these days with all the Fed stuff. But I don't have any bearish view on SPY right now. Like, I know people are calling for the end of the world. I know people are calling for new lows, but I just want to say this, and I said in the Discord as well last week when SPY was at like 400. I said I'm extremely bullish on the market because price is above all four triggers. So on Friday, maybe it broke below the hourly trigger, but you can see the trigger orientation. So you have the daily trigger, the weekly trigger, and then the monthly trigger. The monthly velocity is positive. It's not very positive, but it is positive. The weekly velocity is positive and growing for 2 straight weeks. So the weekly velocity is getting stronger and stronger. So I'm not calling for SPY to melt up, but I am saying that, in my opinion, using a Nimoy long enough, I know that if price moves back down to these levels, that will keep climbing over time. We should see support at these levels. Bulls will probably, or more than likely, buy these levels. So I think there's going to be really good dip opportunities coming up for SPY. It looks a little overextended now. Let's see what the daily velocity looks like. Yeah, I mean, the daily velocity is really strong. There's no divergences. So you can see as price makes each new high, so does daily velocity. Over here, daily velocity, price makes a new high, daily velocity makes a new high as well. Price makes a new high, daily velocity makes a new high as well. So I don't have any bearish views on the market right now. If the market completely crashes and burns, I will have no clue what to say. But from my standpoint, it looks like we are on the move up and not down. I don't see any case for like 360 coming soon or 320 coming soon. I think we'll probably see 430 a lot sooner than we see any of that. I do think that it is possible that we get a dip back down towards like 398, 395, 394. Probably not lower than 398 actually, but I think this will be bought up very, very quickly, and then we'll have a really sharp push back up. So that's all for me. We covered GME, AMC, GME, BBBY, and SPY. So I'll just do a quick recap. So for GME, we're expecting a move towards 25. For a better bull case, we want to see price close the week as close to 25 as possible, because the weekly velocity is still negative, so it doesn't look like price can break above 25 yet. But if we close the week near 25, the negative weekly velocity will go away, and we'll be back in business. Any move below 2092, which is the daily trigger for GME, is bad. Okay, and that's really it. So anybody have any questions? Otherwise, I'm just going to close it right here. Okay, great. Thanks for joining, everyone. Hope you learned something. If you have any questions, just reach out in DM, and I'll see you guys later. See you tomorrow.
Thank you so very much.
You got it.